Hello everybody, this is Dan Sheridan and welcome to today, May 13th. And as we look at the market here, we've had a couple down days. Anything unusual? No, I mean, the news today is Powell came out and said it's going to be a little rough going forward. And again, we all know that longer term concerns, but bottom line is market's been up 3-4 days. We're just backing off a little bit here, and I think it's just this is a process. This is going to take time. It's not going to be an early quick recovery. And so one of the opportunities I'm seeing today is with from Tuesday at the close of trading till today, Monday at the close of trading till today, 2 trading days, the VIX has jumped 9 points. So what I'm looking for is what's something that would take advantage of the higher premiums, but also because of the little bit of these pretty good price moves. We've had 1.5 or more percent moves, 1.5, 2% moves in the SPX 2 days in a row, 2% moves in a row. What could be something that could give me some room from a price move? And so I'm looking at an iron condor today. So here's an example of what I'm looking at. I'm looking at iron condor and SPX, and currently towards the end of the day, it's about 3:45 Eastern right now, and we're at 2808. So I'm going out to June 19, like 37 or so days out, and I'm selling the 3080 calls. That's almost 300 points out of the money. And that's one of the nice things about doing an iron condor. 2 days after the VIX has gone up 7 or 8 points. Right now the VIX is at 36. On the downside, I'm going to sell the 2470 puts. It's about 330 points out of the money on the downside. And right now you're getting a credit for that around $225. And again, on the upside, I'm selling the 3080 calls, buying the 3090s, and the June 19 expiration about 37 days out. And on the downside, I'm selling the 2470 puts, buying the 2460. So I'm bringing in about a 2.25 credit. And because the credit spreads are 10 wide, my risk is 1,000 minus my credit, which would be $775. So that's my margin. So if I'm looking to make 10%, it'd be 10% of the margin or risk, not your credit. So 10% of my risk would be about $75. So if I sell it at $225 to make 10%, I'm going to buy it back at around $1.50 debit. And maybe I don't want to lose more than a little bit more than that, maybe 12%. Don't want to lose too much more than what I make. So if the spread goes to $1.50, I'll buy it back. If the spread goes against me, up. And 12% of 775 would be, a little over $90. So if this 225 spread goes up to 315 or higher, then I would get out. So there's just a quick setup of how I would do a little longer term iron condor with the volatilities up today, and a simple plan with a profit target and a max loss. Again, if you like this type of teaching, check out our website. Right now we're running at SheridanMentoring.com. We're running a $47 trial for the first month of our basic program that goes up to $125 a month. But you can see 2-3 hours a day of live content where we're doing a lot of trades and really trying to teach you the craft and give you meat in the process. So folks, have a wonderful day, and we'll see you next time. From Dan Sheridan, Sheridan Mentoring. Thanks.